How's it going, everyone? It's Sam. Today we are looking at how to start a portfolio from zero. And I'm doing this because I realized that one of the main things that I focus on is dividends. So if you've seen any of my past videos, I'll link to one right here that I actually made recently. And I focus on dividends, but I realized that I have my dividend stocks in a lot of different portfolios, which is fine, but none of my portfolios are really dividend focused portfolios. So that can make it kind of difficult to try to show the growth over time because, for example, in my Robinhood account, I have Tesla and I also have Realty Income. So I have one that's a monthly dividend stock. I have one that isn't going to pay dividends probably for a while because they're focused on growth. And what I really want to do is show you if you're trying to start a portfolio from zero and you want to focus on dividends, maybe it's because you want to provide steady income because you're getting closer to retirement, or maybe it's because you're young like me and you want to, maybe branch out from what you do in your day job and you want something that can be a backup for yourself and pay you some monthly dividends. So if whether it's that or the other case scenario, I think that seeing a portfolio that is purely based for dividends would be really important. So I'm just going to shout out JJ Buckner now because I'm drinking a beer during this. But I wanted to go over this because it's pretty interesting and I think that it could help out a lot of people. So if you are someone that's just trying to start out investing and maybe you have a little bit more breathing room from the stimulus check, or you got a pay raise recently, or you just want to focus more on dividend investing, I challenge you to do this along with me. So right now I'm investing $100 the first day, and I'm investing in M1 Finance. I'll go over why that is, but I do have a link to M1 Finance in the description. I really like M1 Finance. Like I said, I'll go over why, and I would use that link and start doing it along with me. So your deposits might be different. You have to deposit $100 to start. But if you're investing, let's say, $30 a week versus $3,000 a week, you can follow along and everything is relative. So just getting started investing is the most important thing, I think, in investing. So let's start off here. I'm looking at my Robinhood portfolio a few days ago and I realized that I have all these mixed in here. So I have Berkshire Hathaway, which does not pay a dividend. I have Tesla that does not pay a dividend. I have Facebook that does not pay a dividend. And then I have other really significant dividend payers. So I'm going to start, first of all, I'm going to start transitioning these stocks from Robinhood and transition them into my new portfolio. So some of them I might just sell off and then buy something else, but I'll keep you updated along the whole way. But some of them, in a few weeks, I'm going to just start buying because I'll run out of these stocks to move over, I think. So I plan on doing maybe a weekly video where I invest $100. So that is really what I'm looking forward to. And I created this M1 Finance portfolio. This is in addition to my Roth portfolio. So I have a portfolio in here that's a Roth IRA, but we are going to start investing with this portfolio here that will be based on maybe 5 or 10 stocks that provide really good stable dividends. So earlier in the video I mentioned that I wanted to go over why I'm using M1 Finance. I think everyone likes different platforms, but there are a couple things I really like about M1 Finance that will be really good for this portfolio. And I might even do a review video of M1 Finance soon, so let me know what you guys think of that. And I might talk about some of the pros and cons of using M1 Finance. So use the comments below and tell me if you want to see that video. I really like the layout, so I like the pies here, and this probably isn't a good representation, but we'll go to my Roth portfolio. If you look at it, you set how much you want, the actual versus the target. So you set what target percentage of your portfolio you want in each stock. So if one price goes up a lot in a stock and another one goes down, it will show you that they're not the same weighted that you wanted them. So you can set it so they will increase the amount of dividends that it puts into this stock. So it will get it back up to even amounts for what you want. And I just really like the layout. One of the biggest gripes that people have and one of the biggest problems that people have with M1 Finance is that there's only one trading window each day. At least if you're just a normal investor in here, you can pay to invest a couple times, but you can only invest at one point during the day. So if you're thinking you're going to buy a stock and sell it in the same day, you're not going to do that. But I almost feel like that is a positive thing in this way of what I want to do. I'm not looking to day trade. I don't care if a stock goes up 2% in a day or 4%. If it was a good company before, I think that's mostly going to be a good company now. So I'm looking at just investing over the long term. I don't want to get caught trying to sell and buy in the same day or anything like that. So what other people really dislike is something that I really like because it focuses me on, paying attention to the long-term goals of this portfolio. We'll go down here. I want to kind of talk to you about what I want to get out of these stocks and what I want to focus on. So number one, I want steady, stable companies that are at a good value or they have good growth ahead of them. So I don't want any really speculation plays in these companies. I really want something that will be a good long-term buy. And the thing that I like about this is it helps me sleep easy at night. So there are some companies that I know, like Facebook, even like Tesla, index funds too, where I buy them and I don't have to think twice about it. I know that they're a good value. I know that they're going to increase over time. And that's what I want out of this portfolio. And I want to either get them at a good value, so less than what I think they are worth, or I want to get them at a value where I think they have a lot of growth potential or a decent amount going forward. I want them to be easy to understand businesses. So I don't want to invest in mortgage REITs, which I've done before, and I still have some. I don't want to invest in something where I don't really understand the business model. Like I know the name of what they do. I can look up what they do, but I'm not sure I can really comprehend the types of revenues that they can expect and really understand where the business is going forward. So number two, that's what I want. I want something that I can understand and that I can make informed decisions about. Number three, I want competitive returns. So I'm not going to be investing in U.S. Treasuries or anything like that, something that pays 1 or 2%. I don't want to invest in anything that's going to severely do worse than the market. So I want something that's going to do well over time. So otherwise, I don't think that there's much reason in investing in it. This is my portfolio. I already have a buy order for my first stock, and that's going to be JP Morgan Chase. So they are one of the largest banks here in the United States, one of the largest banks in the world, and they are a company that I really like. So a few weeks ago, or maybe it was just last week actually, the U.S. government did a stress test, and they wanted to see how well the banks would do if we went through a series of different events. And they found that generally the banks are doing a lot better than they were back in 2008. They still aren't in as great a financial situation as the government would like, but they're so much better than they used to be. They said, though, that they are going to put some restrictions on dividends just in the next quarter or two, just due to the fact that they really want to be sure that the banks are going to be fine going forward. But this shouldn't really affect JP Morgan Chase too much because they aren't paying out a huge amount in dividends compared to how much they're earning. But this is the first stock that I'm going to be buying. I think that the bank stocks are in an interesting situation now because back last year, the stocks were going up pretty consistently. Financials were doing really well, and that's because we started to raise interest rates. So if you know anything about bank stocks, a lot of the money that they make is from the spread between what people will pay them to get loans from them, essentially, and then what they have to pay out. So when interest rates are at 4.5%, 5%, and they only have to pay 2%, let's say, on interest rates, they're going to make a lot of money compared to if they are at about 2 or 3% that they're getting from the money that they loan, and then they have to still give out 0.5% or something in their accounts. So as time goes on and as interest rates go higher, the amount that they pay out comes up a little bit, but usually there's more of a spread as it goes up higher and as interest rates increase. Now, what happened recently was the Fed cut rates down to a very, very small amount, and the bank stocks really felt that. So not only were they having to deal with the virus and just problems that come along with that, with different businesses possibly defaulting on loans and different people not paying back loans, but they also were making less because of the fact that the Fed cut the rates. So they put them in a pretty rough spot. So as you can see here, Chase was about $140 stock, and then it went down to $79. So I think I bought some around $80 to $90, and I should have bought more, but they are still down a little bit from what they were before. So they were 113 or 115. They rebounded pretty nicely, and now they're back at $95. So they are the first company that I'm buying. And if we just look at their financials, they are pretty pristine compared to some of the other banks out there. They're just very stable. So if we look in 2015, the revenues were about 89 billion. The next year they went up to 91. The next year 95, 104, 110. They were down a little bit so far over the last trailing 12 months, but you can just see it's a constant upward increase in revenues there. And if we look at their net income, which is one of my favorite things to look at, it increased by 300 million. It decreased a little bit here by 300 million. Then it went up a significant amount, about 8 billion, went up another 4 billion, and now it's down a little bit like we said before, but their earnings per share is pretty good too. So, I mean, last year they had an earnings per share of almost $11, and you're buying it at $94 today. That is a really good price to earnings ratio for what you're buying. Of course, it might take them a little bit of time, and the interest rates were higher back then, so you can expect maybe a couple down quarters, but these banks are pretty much backed by the US government, so there's very little risk compared to what there used to be. And if we look at their cash and short-term equivalents, they have about $344 billion in cash as of last quarter. And if we look down here at their book value per share, they are about $76. So that's pretty good too. You're looking at a price to book of about 1.2, 1.25, something like that. And if we look at their dividends, they pay a nice dividend yield of almost 4%. They have a $3.60 dividend, and they've been growing this really a lot recently. So 16% dividend growth rate, and they've been growing this for 10 years, so pretty much since the 08 crash. And if we just look at their dividend growth over time, let's say we go back 5 years, they're paying $1.68. Now they're paying $3.30, so they've almost doubled it in just 4 or 5 years. So this is a stock that I think will continue to produce really good profits and continue to just be a really good stock to hold on to, a really stable stock. I really like banks just in general and what they do, so I think that they'll do quite well over time. So I appreciate you guys watching. I already own JP Morgan, but I want to add more of them. And I think, like I said, I'm just going to continue to add to this portfolio, so I'm probably going to buy, it's hard to tell now, maybe 5 to 10 to 15 stocks. I don't want to add so many that I can't keep track of all of them and really stay up on them. But I also don't want just 2 or 3, so if the dividends get cut, it really hurts my portfolio. So I kind of want to treat this like if I was in retirement right now, what would I want going forward? So something like JP Morgan, where they grow nicely over time, they grow their dividend over time, but they're also a very steady, very high earning company, is something that's very exciting to me. So again, if you guys like this, I would love it if you also invested it at the same time as me. Like if you start this portfolio, and again, I have a link down there to set it up and to start investing with M1 Finance. I really like the layout of this, but I would love it if you guys did this with me and told me what you bought each week. That'd be awesome. I think that would be a cool way to grow and kind of a cool way to float ideas past each other. But let me know what you guys bought this week. I'd be interested in hearing what you think of this and then of what you bought. I appreciate it, and I will see you in the next video. Bye.